I have lived long enough to know that opportunities must be seized or they will be lost.
Welcome back to Wall Street Radio. Today is February 19th, 2025. I'm your host, Tanner Yarton, here with Dan Young. In this episode, we're going to be talking about SMCI in relation to our previous conversation, talking about investments from Toyota and NVIDIA into some smaller companies, the rotation into value that we talked about on the first episode of this podcast and kind of where we're seeing that play out into fruition, and some other themes that are popping up over the last couple of days. Enjoy. Jumping right into it, let's just call back to some of the other episodes that we've had over the last couple of weeks and kind of what's going on. So I think first things first is the rotation into value, what we're seeing. Back in, I want to say it was our first episode, we talked about the expectation of value starting to catch a bid in relation to the tech market being a little bit overvalued and the value market being undervalued, so to speak. And we're seeing that play out almost perfectly with John Deere right now, just breaking out to all-time highs, absolutely frying, missed heavily on revenue, but still seeing a huge move as a reaction to that. And I think we're going to continue to see that across the board. And as soon as this Trump stuff subsides with the tariff talk and all of his foreign policy changes and Doge, I would have to imagine that he starts to focus in on the United States specifically and some of the more domestic manufacturers and industrial companies. I would imagine those start to get a boost.
Yeah, it's all part of the Trump trade, right? The push into industrials and infrastructure has already been hitting so hard. And now I'm pretty curious, is it going to continue that way or is it going to shift back down? And then there's going to be another rotation? Because like we talked about, there's a lot more significant rotations from my experience when Trump is in office than, for example, the last 4 years when Biden was in office. There was kind of this gelled consistency in the market where thematically things would run, but in terms of like rotation dumping and increasing into certain pockets in the market, it was not as substantial. I mean, we're only 2 months into the market and I've already seen significant rotation. So that's another question is like, does that just become a trend that we're going to play and see for the next 4 years?
Yeah, I agree. The other thing too, I was thinking about last night is, okay, let's assume that Trump does go pretty heavy on American infrastructure, assuming he wants to bring more manufacturing back to the United States. Well, does that mean that we need to bolster our infrastructure? Do we need to make upgrades to our railway system? And what does that look like? Because I was looking through some themes the other night and the railroads look incredible. UNP, CSX, most notably. I wouldn't be surprised to see him boost American infrastructure and then see that realized in maybe some new plans or a build out of maybe high-speed rail across the United States. Because again, if you're increasing American production, do we currently have the infrastructure capacity to handle something like that? Will we need to build more? And maybe we see that realized in some of those themes. What do you think about that idea?
I think that's a great idea. I have not heard that one yet. Whenever the puzzle pieces kind of fit naturally, that does make a good bit of sense. And I imagine with someone like Elon Musk in his ear talking about railways, electricity, the things that he could potentially do, this all kind of circulates with the chaos we've seen lately with the FAA and the article we put out yesterday about airlines and the FAA and like what's going on with all of that. This kind of seems like a thematically good type of speculation ad.
Yeah. And it's nice too, because we talked about this with electric utilities as well, but they're quite defensive, which is great to add into a portfolio. Most of what I've been trading, investing, whatever over the last couple of years has been pretty speculative, more growth oriented. But, with electric utilities and maybe now railways and some of these heavy industrial companies, so much more defensive. Yeah, they don't move as fast. You're not going to get, a crazy 1 year, 300% gainer or something like a NVIDIA where you have a hero skew and the stock runs 700%. But if you can get a really nice, clean move on an industrial or railway or something like that, that could be a great addition to a portfolio, especially like you said, like when the puzzle pieces fit together and it just makes sense for what's going on in the world.
Yeah. Speaking of Elon and Trump and all of that, let's talk a little bit about what's been going on lately. It's kind of like a reoccurring segment on the podcast for now and probably will on the research. But we saw some Twitter posts yesterday that were absolutely bananas. And I spoke about this a couple weeks ago, which is like my serious concern about Elon's participation in the government. I just think there's serious concern that I have about his participation and the memes that we saw out of the White House with the deportation, like the ASMR.
I agree. I mean, I saw that yesterday and I was like, no way, dude. Like, I get it. Like, the deportation idea is something that Trump and the White House wanted to play out early on in his presidency to kind of claim a quick victory. And it's certainly the one that requires the least amount of negotiation, the least amount of kind of hassle or headache. So we knew that it was going to play out, but I think the way that they're going about it is just a little too rough around the edges. I mean, you can't make an ASMR video of people getting deported. And for those of you who don't know, ASMR is like that kind of sensory audio that people like satisfying sounds and whatnot. They published a video on the White House Twitter page, got hundreds of thousands of likes, millions of views of like chains dragging across the ground and people getting on planes, and just not a great look, in my opinion. It was posted on Twitter where the majority of Trump's base is, but still, I think that's just a bad look. I think that's going to get picked up by some MSM and probably shared around a little bit, but certainly not something I think we should be doing into the future. And yeah, it goes back to your point about Elon Musk. You know, he's such a memey guy, like loves the joke, loves like the play on words or like the kind of innuendo. And this is all of that. And I think maybe this just went a little bit too far.
Yeah, it definitely did. And that's something that we have to watch about for the next couple of weeks. Specifically around all of this, I'm watching the reaction by not only the people, but Tesla stock has been doing very poorly since earnings. And that to me just has this feeling that like a short on Tesla and Elon, it has felt right for so long because of so many different factors. But the first two being this: one, there's only so much time in your day. There's no way he's focused on Tesla or any other project right now outside of Doge. Like there's no way. And the second is that this is such a short-term game for Elon, which brings me concern. I'm not even invested, but if I was an investor, I would be concerned simply because after the 4 years are up, what's going to happen?
Yeah.
He's gonna be overruled and banished by any other sitting president. Like I think this is just a very short term blitz that he's doing to quote unquote save the country. And whether or not you think that's right or wrong, that's not my discussion here. My discussion here is sustainability of that because he is a very important figurehead in the commercial space as well as entire United States. So we all know SpaceX is going to be huge whenever that decides to fully IPO. We know he probably has other projects underway. Who knows? He could take on a railway for the U.S. that you just mentioned earlier. Like I could totally see him doing that. But yeah, I don't know. I just there's something going on that doesn't feel right. And so for me specifically, like when I look at Tesla, I'm never looking at upside on Tesla lately because he's in the press too much. He's getting too much negative news for me to want to invest, and people are turning in their Teslas for other cars simply because of his participation in this political atmosphere. And so that's just like a very interesting concept that I haven't seen that much. We've seen it before, but like nothing like on this type of scale.
Yeah. And for what it's worth, I think the work he's doing on Doge is good. And he's getting a lot of bad press about that I disagree with. Even if maybe the way he's going about it or the way that he's publishing it in the news is not great on his own platform, you know, the stuff that he's quote tweeting and whatnot. Maybe that's not the best way to go about it. But if you're somebody who is saying, okay, somebody who's exposing what's going on, where the money is going, right? Just posting where the money is going from the government. And you're sitting there going, this is wrong. Like, we shouldn't know this. This is bad. Nobody should have that kind of power. You know, I think that's a bit of a fundamental flaw. Like, we should know these things. I think it's good what he's doing. Like, his goals are pure, in my opinion. It's just the way that he's going about it is not the best. And, you know, to your point about what happens after 4 years, I think he's making an all-in bet. Who follows Trump is going to be somebody who's in Trump's camp, who is also in support of Elon Musk and having him around still, because he does control a lot of companies that are the future, right? Neuralink, Tesla, SpaceX, you know, all those are very not future proof, but prepared for a future of drastically changing technology. And I would have to imagine that that's kind of his plan, is to just go all in right now. And then after Trump's 4 years, he just sticks with whatever president comes in, assuming that it's another Republican or somebody of the Trump circle.
I just think that's the wrong play personally, but I guess time will tell.
Yeah.
So so earnings have been dropping left and right. What has shocked you? What has surprised you? What has been one that you want to take a victory lap on?
Well, before we talk about earnings, as far as victory laps go, SMCI and some of the chips and semi plays, we had talked about this a couple of weeks ago back early February. So like I think the 8th, 9th, or 10th, somewhere in there. We talked about what's going on with DeepSeek, the H100 situation in China, how they're getting them, where they might be getting them from. And we had discussed the idea that maybe they were getting backdoored through Singapore via black market deals, or maybe there was a chance that SMCI was smuggling them in, because we did see some videos surface of H100s being opened in China with SMCI packaging, which was just super strange, kind of felt like a ploy. But in any case, we were talking about the value there with SMCI because it has been just getting absolutely slammed. Their auditor left more recently. And generally, when the auditor leaves, it means that something is wrong financially. It's not a great sign when your auditor up and leaves your company because they no longer want to handle your financials. So company gets absolutely slammed on that news. Want to say dumped from 120 down to 15 or 16 bucks. Yeah, $17. So huge sell off there. But the business itself didn't actually change all that much. Their products are quite specific to their customers. That's kind of the reason why it made such a great run in the first place. They have incredibly well laid out custom components for computer hardware. And I don't think that they're going to get as much of a hit to their actual business as I think people thought they were. And then the auditor left, and that was kind of like the icing on the cake. In any case, they've made a significant move from there. They're up 50% from that discussion that we had a couple of weeks ago, and now just going crazy in the pre-market. So regardless of what their earnings were a couple of days ago, I think most of it just has to do with the fact that people are recognizing, hey, wait a minute, we might have underestimated this company's importance to the AI ecosystem. And if the AI ecosystem is going to continue, it's going to need computer hardware, racking, and server technology. So I'm pretty pleased with that as far as just kind of news goes over the last little while, or stocks that we've talked about and big moves in them. As far as earnings go, none of my stocks have reported yet. I'm still waiting on VST to report in a couple of weeks here on the 27th of February. That's one of the main ones I'm watching. The last quarter was incredible, and I don't really think it got the reaction that it deserved, but maybe price just needed to compress for another quarter, let the market kind of catch up to it. And then, maybe this quarter we'll get a nice move out and away back up to highs. What about you?
So far, it's been a really strong earnings for most of the names that I'm involved in, which I've mentioned previously on the podcast, mainly around cybersecurity. A lot of the companies I invest in are subscription based because of the ARR aspect and the stickiness of the revenue that they can tie into their product. But Dynatrace has had a fantastic report. They're now consolidating back above previous highs, the 52-week high. So I'm hoping for a push to 65, 70 now, which would be a really substantial gain for the company. But CyberArk has done well. I was a little disappointed with CoStar's report last night, actually, but they've bounced back in earnings. They're not down as badly, which kind of just makes sense for the company. They're such a strong fundamental company that they're never going to. I think they dropped like 5-6% on the earnings, and now they're only down like 3.5%. So I actually need to double click, and I'll probably write an article, and we should, about the real estate market coming up, because that seems like it's going to be a sensitive topic, whether the position of rates becomes more influential with the Trump presidency and like what direction we're heading with that. But also the American home is not getting cheaper. And that's something that a lot of people talk about, but I need to read their earnings. For those that don't know, they essentially do large real estate data for commercial and residential.
Oh, cool.
They pretty much house, like, if you think about like the Bloomberg terminal and all the data that they house, like CoStar is known for that, but purely and only for real estate. If you're in the industry or you're trying to collect any of that type of information, whether that means you're a broker, a data analyst, a hedge fund manager, like anything, you have to go to CoStar to get it.
Okay.
So very strong company. But the only other one that, I've had really good success with lately was Procore Technologies. Procore was a position that I took a couple days before the earnings, it is one that I should have entered a while ago. I just been waiting, and I did not want to wait before earnings, and it's been quite the grab, not only before earnings, but then I also took a swinging position because it sold off. And that's like the one thing we need to add a disclaimer for the podcast. But I would say when I look to trade, the one thing I'm eyeing is you like episodic pivots, right? So you like catching the continued run after an earnings report. And
Yeah.
so do I, but we do it a little bit differently, in that you kind of do that same day high volume price action, catching the tailwinds from the report.
Mm-hmm.
I like either catching the reaction if it turns the other way. Like if it's a really strong report and it's getting sold off for no reason, like that's where I'm going to wait to drop in and try and catch that knife. Or I'm going to wait 2 to 4 business days and wait for the consolidation to happen and for it to touch down on the metrics that I'm following. And then I'm going to enter for the second leg. So it's kind of a different way, but there's multiple ways to play it. But that's why earnings are so great, is because the opportunity to get into high value and, again, like very efficient trading during the earnings season, as long as you're not in on the actual earnings call itself, it's pretty productive.
No, I would agree with that. Our strategies definitely differ, but I think more importantly than anything, is to recognize a good report before you make any decisions, before you go and look at the price, before I go and see where I might want to buy it or whatnot. I'm looking at that report and seeing if it's even something that's worth buying, because I think a lot of people just see the price and like, oh, it's gapping up a whole bunch. It must have been a good report. Or they look at the small metrics. They're like, oh, they beat the analyst estimates. The analyst estimates don't mean anything. That is diddly squat in my opinion. It's all about that report, what that looks like, and where that puts price relative to value. And I think that's where your strategy even comes in a little bit more, is like if you have a great report and it's getting sold off for maybe one metric that missed or whatever, it's like, okay, understandable that metric missed, but there's still a lot of value here, and price, deserves to go higher. And usually it does. Like, I think John Deere is a perfect example of that. Gaps down on earnings on a big miss on revenue, but the tailwinds for the business are so strong that, price continues to push it up. So
Yeah, that's a great point, because you could miss on Wall Street estimates, but that type of miss is very secondary compared to what is actually happening in the business.
yeah, no, I agree. I think most of the circles I run in are mostly technical guys who don't even know how to read the report if it hit them in the face. And that's fine, because if you have a technical system that is keeping your risk super tight and trading based off the price charts and whatnot, that's great. But to me, it seems weird. It's like, why would you trade price on an event that is purely fundamental? I understand combining the two around earnings, but if you're trading an event, my first thought is, what's the value of the event? If it's an earnings event, if it's a new innovation or a product drop or something, for me, it's what's the future value of this? Is there actual value? Because sometimes we'll see companies do an investor conference and they'll release a slew of new products and everybody's super hype about it. Stocks going absolutely crazy. And you think about it and you're like, okay, well, this revenue is probably 2 to 3 years out for whatever let's use one of Tesla's examples, and not to dog on Tesla even further, but when they released the semi truck, okay, everybody was excited about it, but that revenue is 3 years plus out from even impacting the company at all. So it's like, okay, great, it looks cool, like this is awesome. Market might be trying to price this in for the future, but is the time horizon just too long? Like, does it even make sense to justify the increase in price on the stock and in a subsequent run from there,
Yeah, exactly.
We could talk about that all day, but what I did want to talk about is the article that we published yesterday. This is your captain speaking, brace for impact. It was kind of a discussion on the airline industry and aviation market, because I'm sure everybody listening has seen the news recently. Just so many crashes, unfortunately, a lot of loss of life, which is of course very sad, and changes in the FAA. The FAA hasn't had a significant leader for 18 months now. We saw Michael Whitaker announced his resignation right before Trump's inauguration, quickly replaced by Chris Rocheleau for the role. I don't know if these specific roles or people coming in and out is the reason why planes are crashing. I mean, I saw that video of the one in Toronto where the plane lands. Honestly, it looks like an aircraft carrier landing. The plane comes like straight down out of the sky, hits the ground, bounces around in the wind, and then flips over. Thankfully, nobody hurt, or killed. But that article kind of just dives into the aviation market and gives a little bit of a teaser for a future article that we're probably going to put out that goes through the actual economics of the airline industry, because weirdly, it almost has nothing to do with flying. Like the way I described it to you yesterday, Dan, was airlines are credit card companies that fly planes as a side hustle. And so this article kind of prefaces some of that stuff, and leads up into a conversation that we're hopefully going to have soon about kind of what the economics of the airline industry looks like. And I don't know about you, but I don't own any airlines or travel in any of my portfolios. And the primary reason for that is because business model is not great. Like, it's really not good. Like, if I'm going to own a business like that, it has to have a much better of a moat, and it has to be less dependent on so many other external factors. And the travel industry is just terrible in that regard. There's just so many exterior factors and things that can go wrong. It just doesn't seem worth it to have in a portfolio.
I've never held. I think I bought maybe some of the airlines back in COVID when I knew that they were just going to get bailed out. But they are running. I will say that. I was going through charts yesterday, and it's funny. It kind of reminded me of groceries and some of the things that we saw in the food market recently, where airlines and groceries, they're running because of the price that they're putting back on the customers through cost increases as well as inflationary increases. So they're the benefits of it right now. Like Alaska Airlines, for example, is on a heater. Delta is as well. And it's kind of funny, Delta didn't get any type of whiplash in the market because of the crash, which not that they should, but we used to see a lot more of that. A door blows off Boeing and Boeing's down 5%. Maybe we're just becoming more immune to it in the market, but I agree with the interesting part about the business is it's not about the planes, it's about all the extras. And when we do that deep dive article, I definitely implore people to read it, because it's going to give you a lot different perspective on how these things operate. And it also circles back to the tone of the article yesterday, which the cliffhanger question that we left with, which is, can companies and airlines specifically find a way to keep us trusting them, to keep us safe in the air and delivered safely from point A to point B, while also navigating all of these complex issues? And that's why a for-profit transportation company such as the airlines is always a really interesting thing, because cutbacks and focusing on margins and profitability, these things that kind of move inversely to safety as a whole. I'm interested to see what happens with your thought earlier about railways. That's something that I'm going to double click on, because I think it's actually a really great idea, given who's in office, not only from the infrastructure standpoint of transporting materials, but if there continues to be this back and forth disagreement between the FAA and Trump and like this whole political atmosphere, it could be an interesting pivot to see trains become back alive and well. And the biggest problem has always been the railways and the people that own them. But if they're given incentives, and if anyone can give incentives, it's Trump. We've seen that time and time again. Maybe we start pushing towards the same type of structure that Europe has and that Japan and Asia has, which I am all for. Personally, I'm a big proponent of the train push. But yeah, it's a very interesting travel type of situation right now. It's not something that I'm invested in, but we all know the summer is going to heat up like crazy. I was on the computer last night looking at tickets to London. I have to go there for a wedding in June. And from tomorrow until mid-May, the price of tickets is around round trip about $400 or $500 to London, which is not that bad. The moment you step over like May 18th and you go into June, July, it goes to $1,200 minimum. So yeah, so we all know they're going to make a ton of money. I mean, Americans going over to Europe in the summer is a tale as old as time, and that's only continuing. So I kind of am interested about the business to see like how, they've been on this heater run for the past month to 2 months. And we're now going to be entering into the summer seasons, or at least the build up to the summer seasons, where their earnings technically should continue to increase especially if Southwest is going to let go of 15% of their corporate workforce, like their financials are going to look really good. The question I have is, are people going to be flying safely? Like, are there going to be more crashes? You can be as profitable as you want for as long as you want, but the moment you kill a bunch of people because of,
Crazy wording, unbelievable wording.
I know, but like, I mean, they're responsible for lives. And we just saw 67 people die in DC for no reason, like no reason at all. So I think it's just a really interesting dynamic now that we haven't seen in a while.
I certainly haven't seen it in my lifetime where planes are just going down at such pace, I mean, we're 2 months into the year and that seems to be the only headline. I mean, even randomly, an F-35 falling out of the sky in Alaska, like nobody injured, thankfully, but still it's like so random. Not even a commercial flight, a military flight goes down. Just strange.
Yeah.
Just strange. I think it's the lasers, dude. It's the aliens.
Maybe time.
Yeah, that's a conversation for another time. I know you are semi-interested in what was the system, the pulsar system, or
yeah, the pulsar system.
Is that a laser system?
Yeah, electromagnetic. Yeah.
Mm-hmm. Well, they're dropping them out of the sky like flies. But in any case, yeah, new article just came out. We plan to have another one out this week and then another podcast this week. I don't know when that article is going to come out about airlines. We'll probably chill on the airlines for at least another couple of weeks, but anticipate more articles to come. If you guys are enjoying the content on the Substack, that's awesome. If you're on Twitter, now Twitter has an articles feature. So I've been able to post the articles from Substack onto Twitter directly. So if you're not somebody who enjoys Substack or you don't get the emails, but you do follow on Twitter, those are being posted there as well. But I think that about wraps it for today. I don't have anything else. Oh, I did want to actually quick mention this before we get off about earnings, because I forgot to mention earlier. Sedge, Solar Name, reported this morning. It looks good so far. I'm getting a couple of DMs here over the last 20 or so minutes about it. I'd probably have to check into it a little bit more, but weird to see solar popping, because I would have anticipated solar to just be getting absolutely slammed in light of nuclear development. But yeah, I think we'll close it out here. If you're still listening, check us out on Twitter at Tanner's Trades, at the Clamshanks for Dan. Get us on the Substack. That's going to be at Sebs, and we'll see you later.
Now watch this drive.